Welcome to the 30th installment in Trading Strategy Guide's Trading Education Series. Today we're going to talk about the trader's crystal ball. Hang around for a bit. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education Series. Today we're going to talk about another element of technical analysis and a topic that goes hand in hand with last week's topic. Today we're looking at identifying future trends, the trader's crystal ball, so to speak. Let's do it. You know, it doesn't matter whether you're trading on a 5-minute, 1 hour, or on the daily or weekly time frames. The whole point of what you're doing is to identify future trends. After you enter your position, there have to be other market participants buying and selling to drive the price in your direction and develop a trend. In other words, if you want to profit from your trade, you need to be able to identify future trends. The general concept behind the analysis and the identification of a trend is that we profit from the directional movement of price. Generally, trading with the trend offers a greater opportunity for profit. The most profitable trades will exist through identifying a trending market because a trend in motion tends to persist. Trading in alignment with that trend is something that you should look for as a trader. The main reason why identifying the trend is important is because it can provide us with a bias for our decisions. The main reason why identifying the trend is important is because it can provide us with a bias for our decisions on future marketing directions. I mean, we don't trade the past, right? The left side of your chart is kind of a done deal. If we could trade that, we'd be gazillionaires. But sadly, we're relegated to trading the right side of the price chart. So then, how does identifying the trend from the left side of the chart help us with knowing the trend on the right side of your price chart? Well, the answer comes from defining one of the terms in the question. What is the definition of a trend? Well, a trend is a price movement that tends to continue in the direction that it has been going. And there's your answer. So trust the trend and expect an uptrend or downtrend to continue, and plan your trading accordingly until you see clear evidence that the trend has changed. So what's the best technique to identify future price trends? I hope by now you understand that a trend never moves in a straight line. Actually, a healthy market should move in steps. An uptrend should move in the form of a staircase where each stair acts as resistance. As the uptrend continues to develop, we advance to a new stair or a new level of resistance. So you could say an uptrend is made of a series of successively broken resistance levels. So typically in an uptrend, you'll find that a broken resistance will often act as a new support level. The general rule is that an old resistance becomes new support. And of course, you can apply the same rules in a downtrend. A downtrend should also move in the form of a staircase where each stair acts as support. As the downtrend continues to develop, we advance to a new stair or to a new support level. So then it follows that a downtrend is made of a series of successive broken support levels. And as before, in a downtrend, you'll notice that a broken support will often act as a new resistance level. The general rule here is that an old support level becomes a new resistance. Let's look at an example using the Euro USD chart, which will take us through how to use support and resistance levels to identify trends, and secondly, to identify a change in the trend direction. Before checking the support and resistance levels, you can see that we have marked the level that signaled the change in the trend direction, so you can see how successful this method is. Let's look through the support and resistance levels to see how they define the Euro USD trend. First, we start with a downtrend defined by a series of broken support levels. The downtrend is also composed of a series of lower highs and lower lows. In this chart, we've only marked the major support and resistance lines. When the price breaks above the previous resistance, the downtrend price structure is also broken. The price is now forming a price structure that shows a broken resistance. However, at this point, this is not a trend change point. For a change in the trend direction, we require once the breakout happens that the broken resistance must hold as support, which can be seen right here. Note the point at which it becomes an uptrend occurs as prices break the previous resistance the price continues to hold above that broken resistance and proceeds with a series of higher highs and higher lows. Identifying future trends gets easier with time and experience. Follow the steps in this video and practice, practice, practice. Look at hundreds of charts, identifying trends and trend changes. Practice until you have visions of price charts dancing in your sleep. Remember that in actual practice, these will not always be textbook perfect. In fact, they will almost never be textbook perfect. Get used to that. Just keep in mind that you can always use a combination of trend identification methods and only confirm a change of trend direction when all the methods agree. For example, you might require a shift in market structure from a series of higher highs and higher lows to a series of lower lows and lower highs, coupled with a broken support that turns into a new resistance, and then combine all that with a moving average crossover or some such group of things. It's important to understand, especially when it comes to trading, that no method or combination of methods is perfect, so don't be discouraged by false breakouts. Let's sum all this up. An uptrend consists of a successive series of broken resistance levels and the price tendency to rise over time. A downtrend consists of a successive series of broken support levels and the price tendency to fall over time. Finding future trends has many benefits, such as helping you establish a trading bias, and ultimately, and of course more importantly, it helps us profit from the currency exchange rate fluctuations. When a support or resistance level is violated and broken, don't eliminate it from further consideration. The general rule is that a broken resistance might still act as new support, and a broken support might still act as new resistance. These rules work in all markets and all time frames. However, the higher the time frame, the more significant the support and resistance levels become. The key thing in identifying future trends is learning it through practice. You'll become better at spotting future trends through experience, initially through analyzing old charts and later through analysis of charts as they develop right in front of your eyes in a live trading environment. And that covers identifying future trends. Next week, we'll continue talking about technical analysis when we take a look at price action. Because of the U.S. election, which is happening as I record this video on Tuesday afternoon, could obviously impact the market for the next week or so, I'm going to skip today's dream trade setup. I think it would be wise to stand aside in the market until the smoke clears. So come back Friday for my strategy of the week and next Monday for my trade pick. And don't miss the next installment of the Trading Education Series next Wednesday when we'll discuss price action. My videos come out at 3 p.m. New York time on those days. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash the like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have another great hump day, and we'll see you Friday.